Hi there, this is Chris from MoneyHub, and this video looks at payday loans. So just as a preamble before I get into it, we're very negative on payday loans. We find them completely overpriced. We find them very aggressive with their fees, with their follow-up, with the ability to kind of roll them over or redraw on them. We think they're just bad news. But obviously you're watching this video because you're considering getting one. What our view is here is please take your time to consider it and look at all the options, which I'm about to just go through and explain. We don't want you rushing in to get one. We find them just really bad news. We know people get trapped in these payday loan cycles. So without further ado, I will explain more, but please don't rush into it. We're very clear in the guide that we've written here not to, not to make a quick decision, because that can have a long-term consequence. You can see from our warning here that we really see payday loans as a last resort. And if you are looking for a payday loan, please make sure that you can repay it, because it's very easy to take the money, but then trying to manage the repayments is not often that easy. And if you are uncertain about whether or not you can pay it, then you're going to face a whole bunch of penalties and a whole bunch of penalty interest rates if you can't. That's just a fact. We know that a $300 loan, a $500 loan can turn into $1,000 of debt very quickly. And so for this reason, we just say, first and foremost, please only borrow if you can repay. But before you do make the decision, look at all the options. While the government's been very helpful to bring down the cost of payday loans, it's still quite expensive interest rates. So we've seen everything from around 50% per year to about 292% per year. Of course, the borrowing is capped at 100%, rates. So if you did borrow $300, the maximum you could repay is $600. But still, it's not. That does not make it cheap. So if you look at credit cards or personal loans, they're usually around 15 to 25% interest rates. So here, you're at least paying double plus all the fees on top. And so what our guide explains, it just takes you through what the options are. We haven't linked to anybody. What we've done is, just to make it clear, is that we've presented what we call the least worst options, but of course they are still very expensive ways to borrow money. So one of them, I'm not going to name them here because the guide always changes, but you can have a thumb through under this top three least worst. We always keep three on there just for your information, and it shows you what the fees are, and it kind of gives you a summary of what you can borrow and what you have to pay back. So with that all being said, what my view is that there are alternatives, but before we get to that, I just wanted to explain that for information about payday loans, what you need to know really is what the fees and what the interest cost is. Those two things will drive how much you repay. So you may have a low interest rate or a lower interest rate than another payday lender, but the fees may be higher. So this is why you need to compare exactly the total cost of the borrowing from one payday lender to another if you're going to properly make a comparison. And the interest rates do vary. And the more regular that you can repay, the cheaper the overall payday loan will be. This is because the money that's being repaid is not being charged interest. So do keep that in mind. There's many times that late fees will be charged. The payday lenders are quick to charge them. So that that's another cost which won't be built into your total quote. But certainly it's usually unsurprising if at least one lender doesn't meet a late payment at some point, depending on the term of the loan, how long you have to pay it back. So really, look at the interest rate. The higher the interest rate, the more expensive the loan, and the total repayment is what you need to know about, which is going to be the loan amount plus the interest cost plus the fees. So see what that will be. The longer the loan term, the more expensive the debt will be, or the loan will be. That's because interest is charged at such a high rate that if you borrow for longer, you'll pay more back. Many of the payday lenders helpfully let you make early repayments without fees. if that's something that you want to do or you think you can do, please ask or make sure that the payday lender lets you do that, because otherwise you may be, having to pay an extra fee to be able to repay the money that you owe. We have looked at everything. We're very conscious that there are some least worst ones which we've listed, but at the same time there's also very high interest rate out in the market. We've seen, as I said, 292%, and that just makes things incredibly expensive. It's not too difficult to borrow $500 and then have to pay back $1,000 in total within a few months. So please be very, very careful before proceeding. What people ask, it's quite common, is what happens if I can't repay? The answer is you'll be hit with fees. That's pretty much what's going to happen straight away. The fees come first. Then, you can, if you have had a change in personal circumstances or a financial difficulty, then you can look for it to be it's assessed under hardship, but that's a whole different process. And of course, the payday lender has to do the right thing there and see if you can repay it and what your situation is. But if you haven't, but if you're not approved for that, then you will be chased for the debt, and things can get nasty quite quickly, because a lot of people on payday loans, they have trouble repaying them, and the payday lender would go out of business if it let everybody who can't repay them, not repay them, because it needs to get the money back. So they are going to follow you. That's what they do. That's their business model. That just means you need to be prepared to be able to have the money set aside, or at least get it from somewhere, to be able to pay it back every week or whenever it's due. This is why payday loans are very stressful debts, and that's why we always suggest there's so many other options you can consider, which I'm going to list down below. So if you already have a payday loan, or if it's something that you're looking to get, then what we always suggest is look at other sort of debt options. So one of them would be look at your credit card. Can you get extra balance out from that? The reason we say that is because the interest rate's going to be maximum around 25%. So that's always going to be cheaper than a payday lender. Plus, you don't have the the after effects of the penalties if you don't repay it, like the payday loan as a, that's the model. Whereas credit cards are less aggressive debts. But then also we're looking at cash withdrawals on credit cards. So if you can't, if you need to have cash to actually pay someone or something, then maybe it is an idea also to look at, considering making a cash withdrawal on a credit card. Once again, you'll be paying the 25% interest rate, and that's going to be a lot lower. You're not going to pay any upfront fees to do it. So that's something worth considering. Look at also increasing your credit card limit. The problem with that is now with CCCFA, the laws have changed, so lenders have to be, or credit card banks and stuff have to be very, very careful about doing this. But, if there is a chance, then it is worth certainly applying. It does take some forms. Fourth, look at a 0% or a low balance transfer credit card offer. The reason that is people max out on credit cards, and then they've got, they're overdrawn on the bank and something's due and they think, I need a payday loan. It's not uncommon. Payday loans aren't, for a certain sort of wage earnings sort of level. They do apply across the board. I know that from, a whole bunch of personal experiences with people I know. And that's why there's no judgment in them. It's just sometimes people run out of money and they need money. Payday loans exactly is what they are, exactly designed as their name says. But, there's a way to avoid them altogether if you can just set up or sort out your debts before it gets to this stage. So 0% balance transfer credit cards work really well when you transfer the debt onto a nice low interest offer or a zero interest offer. You repay it, progressively, and then you cut up the existing card that you transferred it from, so you don't incur any more debt. That's how it works. That's the best way to do it, successfully, so you can be debt free. That will help you save on the interest costs which you're paying, and also it'll give you free money because you're not going to be, wasting money on those costs. So that is something to consider. You know, of course, if you're getting a payday loan or if you're looking right now, then it's not going to be something that you can quickly jump into with regard to the balance transfer, but it is something, you know, you can put in place. Once lenders see, or once banks see that you have a payday loan, that does also create some issues. So it really is such a great idea just to kind of like avoid it from the start by, you know, managing your money a little bit more, slightly differently to avoid these situations. Personal loans are another option. They go for around, you know, 10, 15, 25%, and that of course is much lower than a payday loan. So you may want to consider looking at those and you know, getting one out, possibly if you have a payday. So if you have a payday loan already, it could be an idea. And normally we don't say solve debt by taking out more debt, but if a personal loan can be taken out and like repay, you know, one or two payday loans that you have floating around, then likely to be a cheaper option in the end, and you know, like bring your debts under control. We also suggest considering, like all these are all considerations, borrowing from family. Not something that we have too much experience in terms of writing guides about it, but it may be just something that you want to consider. And then at the same time, increase your bank overdraft. While we don't love what banks charge in terms of the overdraft, we find it quite high. You know, it is going to be a lot cheaper than a payday loan. Thanks very much for watching this review. If you have any questions about payday loans, please leave them in the section below. We've got lots of links to payday loans guide from MoneyHub and some related information. And also, please know that, you know, payday loans, they're not the final option. There are other options, and we just ask you please to take it very, very slowly before rushing in, because once you have one, it's very hard sometimes to get rid of it. We just don't want you dragging around these debts month after month or week after week. It can get very stressful, and then, you know, it's not something that you want to be doing. So thanks very much, and do let us know if you have any questions or need anything further explained. Thank you.